Hello, everyone. Welcome to REI Doctors Podcast. Today, I'm extremely happy to have my friend, Dr. Bayo. Dr. Bayo is the CEO and founder of Dr. Breathe Easy Capital. His focus is increasing financial literacy among physicians and helping others achieve financial independence through investing. He obtained his undergrad degree with high distinctions from University of Toronto in Canada. He obtained his medical degree from Saba University School of Medicine, completed residency at Overlook Hospital in Summit, New Jersey, and fellowship at Allegheny General Hospital in Pittsburgh. Bayo works as a pulmonary and critical care specialist at Baptist Health, Fort Smith in Arkansas. He is currently both the pulmonary rehab director and the ICU director. Bayo was a recipient of Gold Snapshot Award from the Society of Critical Care Medicine in 2018. Bayo, along with his wife Bridget, bought their first multifamily property in 2018. He has invested in over 20 startups and currently sits on the advisory board of a healthcare related startup. His company, Dr. Breathe Easy Capital team, currently owns over $140 million worth of assets, including oil and gas, self storage, luxury senior living, and multifamily. Dr. Breathe Easy Capital has experience in self storage, multifamily, oil and gas, and commercial real estate investment. Bayo is also a husband and father of three. His interest includes blogging, travel, and spending time with his family. Welcome, Bayo, to Arya Doctors Podcast.
Thanks, Dr. Raj. Glad to be here.
Obviously, you've done so many things as I introduced you there. But how did it all start? What made you, of course, instead of being medical school and a doctor, start looking at alternative assets in the first place?
So, thanks for asking. I'm a Nigerian. So, in the core of being a Nigerian, we've always been into hard assets. The way I was brought up, my family, they all invested in the house. And usually, the sign that you've made it in life is when you buy houses, something that is tangible, people can touch. So I'm just basically continuing with the tradition. Another part of it is the fact that I tried everything, right? I've done Forex, I do stocks. I still have stocks, obviously, both in my 401k, solo 401k, and even I do like a little bit of swing trading on the side, but with a little bit of money though, which I call the play money. But all of these are very volatile. Every day, the price increases, it decreases. But real estate, it's a little bit more stable in the fact that you're not constantly every day looking at the prices. You're like, oh, 8 is now 10,000 more, the 10,000 lower. So you have more peace of mind with that. And also, I wanted to diversify and I started with a little bit portion, like maybe 20% of my portfolio. And over time, they've grown to be about 60% of my portfolio at this time. And that's because they've improved in value faster than other asset classes. So as it stands, it seems like it's my best performing asset so far and the most stable asset. So that's one of the reasons why, I said, if something's working, I might as well just continue going with it.
I introduced you saying you started only in 2018 and you've had a phenomenal growth in just 5 years. Tell me about the first deal, a real estate deal you did, and how did it perform and how did you find that property?
So my first multifamily deal, it was actually found off market. So it was 8 units and this was in Poro, Oklahoma. The person that sent it to me turned out to also be my property manager now. So he manages multiple properties. And because I started putting the word out there, I started talking about it a lot because I used to do the limited partner in deals before. And I started talking and the word get out and it took a chance on me because oftentimes when you get a good deal, people tend to send it to the higher ups, right? They send it to someone with a bigger portfolio that can take it down. But he sent it to me. We analyzed the deal very quickly and the deal seems to work out well. It was a small deal. I think we bought it for $270,000 and the rent at the time was about $450, $500 each. And when we do the analysis, we found out that we could rent it out for $650, $700, right?
Mm-hmm.
So it was a very successful deal because 2 years later, the deal was worth about 420 also. So I was actually able to cash out, refinance all my money out and also, get a little bit of cash. So of course I did a few more deals in between that, but that actually made me feel more confident even, with the way I analyze the deals and the way I also the sourcing of the deal. And of course, he's been sending me more deals since then and they all been good deals.
You're a pulmonary critical care physician. COVID, like a stressful time we went through, how much time Do you dedicate for non-medical, non-family time, investment, those kinds of things? How do you manage your time in a week?
So in the beginning, it was rough, obviously, because I wanted to do everything. And it's important though. I know everybody always talk about the fact that you need to have all this work-life balance. I actually do have a different opinion, especially in the beginning. I think there's no substitute for the grind. You have to do what it takes to get to the next level. But once you get there, that's when you can start thinking of way to optimize and be more efficient. When I first started, I would work 80 hours a week. I'm a pulmonary critical care physician. I've only been practicing about 4.5 years, actually, which means it was in the beginning of my career. So I wanted to impress everyone. I wanted to be the best pulmonary critical care doctor ever that they've seen in this area. I say that's successful now because now I'm the ICU director and I'm also the pulmonary rehab director. So someone must really believe that I did a good job. But at the time, I'll come home sometimes at 8 p.m., 9 p.m. Then I would be analyzing deals, answering all my calls, texting leads, and trying to figure out how to get the deal. So yes, it was rough. I would sleep like maybe midnight, 1 a.m. and wake up like 5 a.m. in the morning. But after some time, then I learned a lot of ways to be more efficient. So right now I have built a team. I have an acquisition manager now because before every day I analyze about 10 deals because I had a target for myself. Analyze 10 deals a day. Oftentimes 0 out of the 10 will be a good deal. I won't call it wasted, but you've basically spent that 2 or 3 hours analyzing deals that never came to nothing. So now that I have acquisition manager, he can analyze the deals. So when I analyze like deals, send me like 5 of them that makes sense. And then maybe one of them will look at it very seriously. So that cuts away so much. And another thing is we have a virtual assistant who helps us with social media and many of the tasks that doesn't require sophisticated skills. Another secret is actually my wife, right? My wife, she stays home and she's actually the manager. She manages everything. She manages the VA, she manages property manager, she manages the acquisition, Sometimes she also can take a look at some of the deals herself. So she basically kind of helps as another, like a manager. So that's what she serves as. And also she's very understanding, right? I often do have a husband that goes to work, come back, started doing property assessments and investment analysis, sleep at midnight, wake up at 5. So somebody is carrying the loads, right? So she's also a real estate professional. So she actually is on board with it 100%. So that's how it is. So you do the grunt, then you improve your efficiencies, build a team around yourself. So right now, this is a weekend, I have time. I was spending time with the family. We go to places during the day, weekdays also. I have a little bit more time, we're going. I also take a little bit more time off now too from my regular job since I've been able to build enough wealth to be financially free, even though I chose to work, but now I can take a full week off without having to think, I'm missing that RV. So I think once you do the work early on, you should look at the long-term benefit, which is the fact that I actually do have more time now to spend with the family.
That's a great point you made. I completely agree, right? It's similar to going through medical training. You cannot just become an attending straight away. You have to do your training, your medical school, your residency, put in the work to become an expert. So you already
Yeah.
put in the work for it. Now you can be an expert in that area. The other important point you made is about buy-in from your partner or spouse, right? So if you need to make sure they're okay with it, they agree with it, they're part of the team and they feel included in whatever you're doing. So there are two excellent points you made there. So
Right.
you are in the middle of the country, right? So in Arkansas, you have done a lot of deals locally in your area. You're an expert in that area. So can you
Yes.
tell our viewers about your market? What's good about your market? What's bad about your market? Why are you excited about that?
Our market is mostly Oklahoma and Arkansas. So Arkansas market, as you would suspect, is just like other markets. There are places like Northwest Arkansas, which is booming like crazy. It's like some places have been growing like 10% every single year for the past like 3 to 5 years in Northwest Arkansas. And that's because of the growth of Walmart. And Walmart required many companies to bring their headquarters, or at least they need to have an office in Northwest Arkansas if they want to work with Walmart. So that actually brought many technological companies and other lot of companies over there. And also, it used to be a college town, and a lot of young people, a little bit more optimistic. And I think it brought a lot of younger tech people into the area. So that is still booming. Right now, you would think duplexes that used to be like maybe $250,000 would be like 650 or something like that. It's ridiculous. But you would think perhaps you can get it at least close to what it was like 2 years ago. But oftentimes now they drop the price like 10%. Okay. But that's still going to be like 580. Like it's going to be still close to that. So that's what I see. There's been a slight decrease in the cost, but people are still buying. It stays slightly longer on the market. Before it would take like 2 days. You post it, it's gone. So now it's taking like a month or two, but it's still going, so that's what I'm noticing. And after the first drop in price, it's gone. So I'm not seeing what people are predicting so far in terms of, oh, you're going to be like 30% crash, and I think most of this price decrease was the seller trying to be too aggressive first anyways. In our Fort Smith market, which where I am, is more of a smaller area, tertiary market. It's very stable in this market, but it has its own advantages and disadvantages, right? Which means if you want appreciation, you have to force it oftentimes, right? I like the fact that there's those two markets and you can basically decide which one you want to buy in at a particular point in time. But I just think, in terms of rent, I have not seen a negative impact on rent so far. I have 3 offices. We just rented one out and then one was renewed. And the one that renewed, we increased it by 5% yearly escalation at a time. And then the other one too, so we increased it, the total by 5%, and there was no complaint. We also have the same thing in some of our multifamily. We have increased between 3 to 5% with no drop in occupancy. I think it's more stable in our market, actually.
So that's really great. And you recently closed a very big, like more than 100-unit property in an
Yeah.
area. Can you tell our viewers, like, what are the business plan? Like, how did you find this property and what is your projections for that specific property you closed on?
So about 129 units. It's close to the Highway 271 over here. It's actually about 10 minutes from me. And we've been working on the deal off market actually since October last year until we finally got it under contract around January this year. Oftentimes it was by my acquisition manager. So my acquisition manager, by the way, is the number one commercial broker in town. It was a strategic partnership so that all the deals I see it first. Right. And of course, it becomes part of the general partner. It's also feel like it's invested in the deal. He also invests actual money into the deals too. Our goals are aligned. So anytime we find something, it's like, can we take this down? So if I made this 129 units, we were negotiating it from like $6.6 million. And because of the increase in interest rate, we were able to keep shipping down on it by the time goes. So we finally got it at 5.7 million. The good thing is right down the street, literally opposite across the road, properties were renting for about $200 more. There are 2-bedroom, 1 bath, still renting for 450, 500, whereas the typical price is 750 in that area. I actually think we can do more, but we're on the road, of course, conservative. So we plan to put about $1.2 million to renovate. So like you said yesterday, the average is about 10,000 per unit ish. So that's what it came down to. So $1.2 million. So we raised about $2.1 million for it because the bank gave us 75% LTV of both the construction and the acquisition cost. So close to
Nice.
$7 million, right?
Mhm.
So the good thing about that deal now is we know what price per unit is in the area. So that's why if you're local, you need to know your market. We purchased it at 44,000 per unit, and we know that it's 75,000 per unit in general. So there's a lot of delta in it. Then when we finally appraised it, it's actually appraised between 8.5 to $9.4 million.
Mhm.
Yes, because they have the comparison and by income approach.
Mhm.
So income approach was like 8.5, and that is estimated that when we finish, obviously, if we fix it. So basically at the rent that it should be. So that's how they calculated it. And then by sales comparison, it came out to be 9.4. So we know, confident into the deal, that we'll be able to confidently cash out refinance at some point, right? When the interest rate, hopefully, is down than we are now. It doesn't have to be super down. We're like at around 8.5%. even if you're down to like 6%, right? You can cash out, refinance, return investors' money, and then, the famous infinite return.
That's great. Oh, you not only do real estate, you're also heavily involved in educating other physicians. You told me you had like a blog for the longest time, even as a trainee, you had enough time to maintain a website and blogs. So tell me about that aspect of it. Why are you passionate about it, and what kind of education are you providing for other physicians out there?
So when I was in residency, of course, most of us started our learning from white coat investors. So I was reading his blog, learning. I read this book also, and I got fired up. That was immediately after medical school. And I was surprised and maybe even more upset at the low level of financial literacy among my colleagues, right? I have questions from what is 401k? I didn't even know what is Roth IRA, how much money should I put in, what's the minimum? And these are like, basics, but obviously I did not know that too for a while back. So because I always have to answer people question all the time, I figured I need a central place. I need to find a place to educate. Of course, I do send them to white coat investors and all these other blogs, but they keep coming to me again and still asking me the question. So I say, you know what, I'm going to start my own blog. Okay. So every time somebody asks me a question, I will just type a blog about it. If somebody asks me what is 401k, then I'll write a blog post about all you need to know about 401k. If somebody asked me about Roth IRA, I had to contribute to for Roth IRA. Somebody asked me what kind of stocks should I put in there, then I did a 3-fund portfolio. How do I pay off my debt? Then I actually started the series called Paying Off Your Debt. So basically, if anybody has paid off their debt, I interview them. I would talk about, what are the strategies you use. I learned a lot about people also from that exchange, because some live with their parents to get it done. Some people with rice and beans, apartments, 2-bedroom apartments. So different strategies that you'll be surprised that people have to go through. But you know what? They got it done. So taking a side gig, working double jobs. I felt fulfilled by doing that because it takes a lot of work. And to be honest, I wasn't making a lot of money. I have some ads on it, because I used to post about 3 times a week. I was posting a lot. But during COVID, I had to pick between being a critical care physician and a blogger. So I obviously had to help out during that time. Since COVID, I'm just getting back to it a little bit. But still, though, there are contents there. And I think it's good for beginners because at that time, I was just getting started.
What is this website called?
DrBreatheEasyFinance.com. If you just type Dr. like DR, breathe, like BREATHE, easy, like EASY, finance, it will show it, But also we have Dr. Breathe Easy Capital now. So you're going to see both. So you can explore either one of them.
You were also talking to me about the new deal you guys are under contract in Florida. What is this deal? Where is it? What's unique about it? How are you taking investors for that deal?
Yes. So we have a new deal. We did analysis of the market locations and we found per St. Pete area to be one of the most resilient or likely to be resilient in the next few years. And part of it is the inflow of people from everywhere. And also not just regular people, rich people, because it's close to the water and it's nice weather, no state income tax, and favorable to retirees also. So it's a very perfect state in terms of relocation for a lot of people. And this is also confirmed with the fact that in St. Pete, there was like a few streets which was zoned single family, and they literally just changed the zoning requirement to what is called high density core, which means on an acre, you can build 30 units apartment complex. So that also shows that oftentimes you're going to be the one to go and ask for zoning change, right? We've done it before. We buy a piece of land. We have to go and talk to the city, back and forth. Sometimes takes you like 6 months before you can convince them to build a multifamily over there. But here, you have a situation where the city themselves has changed the zoning, but nobody is doing it so far. It's also still new. And because I have boots on the ground and I have my partner there, Basco, who's at Core Capital, KOR Capital, and he has a construction background and has done something like this before in Clearwater area, Tampa. So we started the fund. First, we bought a couple of these already by ourselves. And one of them was bought for like 300,000, 350. We know that this land, if you just do the zoning put like a plan. It's a double lot. So I think we can build about probably 8 to 10 units on that lot. So if you have the plan, you could probably set it for double. And once everybody gets to know about this, see construction happening, I think that area would also increase in value. So that's the game plan. Buy a bunch of these single family homes, convert them to multifamily. So ultimate value add, right, to that land. The goal is to return the investors' money in about 2 years and then keep them with us 50-50 split. And this is a long-term hold also. Oftentimes we do deals, I will always say 5 years to exit. This one, because we're going to do everything from scratch, there'll be low maintenance on it. There will be less capex, right? And since we're the builder, the construction, my colleagues, so we can be able to maintain it. I feel like we shouldn't be having any major trouble for about 10 years. Especially in the market where you're not so sure, oh, we're going to a recession, no recession. If you have a good deal, might as well just hold on to that deal, because if you can't find a better deal, why sell this one? So that's a good hope of the plan, is to hold it and you can just get cash flow for the rest of your life. So right now we're raising about $5 million. It's actually very close to full just commitment right now, but we might extend it further because our goal was maybe just buy 2, build these 2. But we raise a lot more, we can buy 5 and build more. So we can continue to do that. So that's what it is about the deal.
If anyone wants to know about that deal or anything else you're doing, how can they get in touch with you?
So you can go to Dr. Breathe Easy Capital. Just type it Dr. DR, then breathe like that. Easy Capital. You're going to find our website and you can just join our investment club. You just need your email and then we start sending you all our webinars, updates on our deals, what we're doing. Or you can just go on our portal. On the same website, you can see join portal. When you join the portal, you can see all of our old deals, including the oil and gas, the senior living, self storages, and this new deal. We have a video posted on it. And as soon as the slide deck and everything is available, we're going to post it there. So it might be the best way for you to check it yourself and also look at other things that we've done. So those are the 2 ways. And if you join the portal, I will book like a 30-minute call because I like to know all of our investors. I like to talk to them, understand where they're coming from. Like you said, I used to write a blog. So I do a little bit of financial coaching and I do a 30 minutes free session just to figure out how much do you need to retire, what's your goal, what's your plan, and how are you structuring your portfolio, your personal financial statement or plan. And we can just chat about it. I'm not a financial advisor, but I just give my own input on whatever you already have on.
That's great. It was a great session today. We learned about your journey. We learned about your market. We also learned about your passion for educating others and your latest deal. So thank you so much for coming on REI Doctors. Before I finish, I just want to tell our viewers another thing. Of course, we'll have all your contact information in our show notes so people can contact you through that as well. I also wanted to alert the viewers on another website that we have created recently called passiveinvestingchecklist.com. If someone is going to invest in a multifamily deal, as a passive investor, you want to know what are the things you need to check before you invest. You can go to this website. It's called passiveinvestingchecklist.com. And then it goes through step by step. How do you evaluate a sponsor, a market, a property, what the financing, business plan, those kinds of things. It also has a PDF download you can download from the website and then use it as well. So with that, thanks Bayo for coming on. And yeah, I look forward to our offline conversations and collaborations.
Yes, thank you, Raj.